Real estate giant CapitaLand has posted a dip of 4.2% in net profit for its second quarter. That's compared to a year ago. It says the drop is largely due to a one-off cost from a recent acquisition that was completed in June. Here's Cheryl Lin with more.
Higher gains from asset recycling and revaluation supported CapitaLand's net profit for the second quarter. But it wasn't enough to offset the drag from the one-off $36 million expense to buy Ascendas-Singbridge. CapitaLand's net profit fell 4.2% to about $580 million from almost $606 million a year ago. Revenue also slumped around 19% to nearly $1.1 billion for the quarter, largely due to lower contributions from residential projects in both Singapore and China. However, the group called it a credible set of results considering external headwinds. And going forward, they say a key strategy is to continue focusing on asset recycling.
We have more REITs, more private equity funds than many of our competitors. And that gives us, I would say, much greater optionality than many people in recycling stabilized assets. So I believe that as long as we focus on our key strengths, we should be able to ride through any types of crisis.
In addition, it says contributions from Ascendas-Singbridge were not factored into this quarter's results, but it will do so materially from the third quarter of the year. The $11 billion acquisition created the largest diversified property group in Asia, and with that there was a change in asset classes as well. CapitaLand now has a sizable exposure in business parks, logistics and industrial sector, even more than its residential exposure. Analysts agree that this deal will help boost its earnings, given Ascendas-Singbridge's already very big portfolio of recurring income. The next challenge, they say, is finding assets to deploy capital to.
Globally, if you're going to buy assets in Europe, in Australia, in Singapore, assets are not cheap. So the key question is, can they buy something that will be accretive and there's a long-term runway? And a lot of companies, funds are actually competing. So in the very competitive world, where do they find value?
And as for its residential exposure in Singapore, the group said it remains cautious, but is always on the lookout for good investment opportunities.